Neil, thank you so much for joining FT Chinese today.
Thank you.
Let me start out by asking you what the landscape is like for risk capital in China today. Many people say too much money. Do you share those concerns?
Indeed, liquidity is very strong, and people would love to put money into alternative assets. Venture capital and private equity are the two type of investment. Domestic investor would love to put money with. But even if you look at the domestic risk asset market, the private equity side is more heated. Because everyone, at least a lot of investors were looking to at so-called pre-IPOs. So people are willing to pay premium, and especially with Asia still at a relatively high PE multiple compared with the U.S. or Hong Kong market. On the venture capital side, I would say it's pretty reasonable in terms of so-called bid and ask. There are always competitions around most important so-called hot areas, but in general, I see valuation has been stable against, let's say, 4 or 5 years ago.
When you're talking to an entrepreneur, trying to persuade him to take your money, in some ways, many people would say, you have Sequoia money as an entrepreneur, you have a halo, because Neil Shen is such an awesome investor. But what do you think is the most important thing for entrepreneurs in deciding whose money to take?
Well, there's a lot of factors, but if you want to say what is the single most important factor, it's actually the value-added services, which is, I think, critical in today, because many of those companies gonna, run into, heavy competitions, gonna run into a lot of, challenges in ramp up its business, and the shareholder can play a very important role. So I think, what Sequoia really represents is the experience we had with so many companies, startup companies in the last 12 years, and obviously experience learned from the US. So what it looks like for a startup entrepreneur to go through this kind of ramp-up process, up and downs, and all the challenges. Been there, done this before with other entrepreneurs, and so that's a very, very convincing angle. Obviously, on top of that, you need to, for example, have the fund structure right, catering to the type of investment we try to make. We invest in Dianping back in 2006. So by this time, it's like 12 years. But we continue to hold the stock. But if you are a little bit, short-term oriented, let's say because your fund has a short term, then you are likely to push the company to do something which may not be helpful or may be actually detrimental to long-term value creation of the company. So I think you need to have a very long-term view. You need to be patient, and obviously at the same time, very importantly, you need to continuously provide value-added service to the entrepreneur, helping him to navigate all the challenges, the pitfalls, while he going through this startup, whole journals.
As more and more people put risk capital into early stage companies, do you find that many entrepreneurs just want the highest valuation?
Well, I think the entrepreneur is getting very sophisticated. And I think most smart entrepreneurs will choose the one who better understand his business and from his perspective that might have the best chance to helping him. Most of the entrepreneur realize that. Will he try to get the best bid? Probably not. But obviously, you need to pay a fair price.
And what are the areas that Sequoia China will be focusing on in the next year?
If you look at ourselves 12 years ago versus today, frankly, the area of focus hasn't been changed. It's information technology, it's consumer, healthcare, and industrial tech. But within each sector, the themes might change from time to time. For example, today, in the information technology world, we probably spend more time on enterprise applications like big data, SaaS, artificial intelligence, than back, let's say, 15 years ago, where most of our target company are in the consumer internet space. Pick another example, industrial tech, right? Clearly, we will be more excited about electronic vehicles and as well as, for example, autonomous driving, which is not obviously something we'll be spend time on back 4 or 5 years ago. And so you just have to looking at the trend and what are the new technology are driving those sectors and spend time and hopefully doing your work and try to explore the market a little bit ahead of the game, a little bit ahead of the competition.
Do you think that there is a bubble in some of these areas?
There's always some sort of more enthusiasm, I won't call it bubble, about certain sectors. For example, artificial intelligence is the buzzword. And I'm pretty sure there are a lot of money looking at artificial intelligence in the last 12 months. But for those so-called hot areas, you need to be, keep a very sober view about the prospects. Artificial intelligence is important, but many of those applications are still early. Yeah. So you need to be disciplined in paying the right price. And probably more importantly, you should position yourself ahead of the so-called the curve or ahead of the grain. When we starting to look at artificial intelligence, we actually end up made the investment back 3, 4, 2 years ago at Series C valuation, and which was obviously, when you look back today, it's very reasonable.
Speaking of getting ahead of the curve, do you think that China has already leapfrogged the U.S.?
Well, I think I would say in many areas, China is indeed, ahead. I mean, look at the last 2 to 3 years. Many of those applications on the consumer internet side, came out of China. Live broadcast, bicycle sharings, etc. We talk about breakthrough technology in quantum computing or in artificial intelligence. I would say probably, China is on par with U.S. But on the application side, as I mentioned, thanks to the widely penetrated mobile internet applications with all those data, China is probably ahead of the U.S. But if you ask me today, what are the 2 most attractive markets in the world for venture capital? I would say no doubt it's U.S. and China, and I would say they are probably 1 for 1 in terms of size and depth and sort of market opportunity.
Final question for you: do you think that we'll see more American companies trying to succeed in China, given the huge size of the market, and will we see more Chinese companies trying to make a go of it in the U.S.? Or do you think for Chinese companies, U.S. is so much smaller, much less interesting?
No, actually, in fact, I see many Chinese companies very interested in exploring, U.S. market. Both markets are big, and there are some great market cap could be created if a company in China successful in U.S. and vice versa. The question is, how difficult will a company to penetrate the other market? There's always a challenge, whether it's for a U.S. company or whether for a Chinese company.
Either direction.
Because some of those applications have to do with culture. And then when that comes, the key question here is, if a product works very well in the U.S., can that be successful or be competitive in China? And same for the Chinese company. Remember one thing, both, I think, countries have some very strong local entrepreneurs. So if you have a so-called similar company in the other country come to compete with you, it is always a very tough question.
Thank you so much for your time.
Thank you.
记得点赞关注哦。